Good Tuesday afternoon to you, everybody. This is Lee Gaus coming at you again from the offices of IFG and EFG here in Chicago. And this filming is a follow-up from my last contribution, in which we talked about the LAWG647 model and how it may be used most effectively. If you remember, last week we talked about several commodities: coffee, crude oil, the dollar index, and the cattle hog spread. Well, after last Friday's close, I'm here to report that none of those trends have changed, that the coffee market, crude market are still in a significant downtrend. The US dollar remains in a significant uptrend, and the cattle hog spread continues to favor cattle over hogs. Now that again is, of course, according to the LAWG647 model. Now I want to talk about what we may have seen. If you remember, I was going to talk about any trend reversals that last Friday would have shown us, and there were none. So we had no trend reversals as of the 13th of March. But this coming Friday, we've got some pretty interesting stuff going on according to the LAWG model. Now keep in mind, what we're going to do and what I want to do is, if we get any trend changes, the first thing I want to figure out is if there are fundamental reasons why there was a trend change. And if there were fundamental reasons to buddy up with the technical LAWG647 model, the next question is it possible that we're sitting on top of and ready for a very long-term dynamic move? That's where I think the LAWG647 model really excels. So let's take a look at a couple commodities. First of all, April feeder cattle, which are now in a downtrend. If they close at or above 212.55 on Friday, the trend will change according to the model. This is all according to the LAWG647 model. April cattle are in a downtrend. If they close at or above 159.42 on Friday the 20th, they will go, according to the model, into an uptrend. Now there are three very interesting commodities. One is May cotton. If May cotton, which is presently in a downtrend, is presently in an uptrend, and if it closes at or below 60.76, it will go into a downtrend, and as of this filming, it is already trading at 60.37. The May cocoa, which is in an uptrend, if it closes at or below 28.39 on Friday, it will go into a downtrend, and it was trading at 27.33 just before we came in to film. And then there's the June 10-year note, which is now in an uptrend, and if it closes at or below 127.13, it will go into a downtrend, and just before filming it was trading at 127.18. Now again, what we're going to look at, if we get a reversal in any of those commodities, we're going to look to see if a major move is possible, and if we can buddy up the fundamentals to the technicals. So again, I'm trying to share with you the part of the model that I think has the greatest value, and what I think you may want to follow now and into the future. If you have any questions about this, you can reach me at 877-304-1369. If that's too personal, you can email me at lee@efggrp.com. That's lee@efggrp.com. Be more than happy to answer whatever questions that you might have. I'd love to hear from you, obviously. Keep in mind, as always, that if you're going to trade commodities, if you're going to trade options, futures, or spreads, there is significant risk involved in trading these tools, and you should be very aware of the underlying risk that you are assuming when you become involved in futures trading. Hey, thanks a lot for watching. I hope to hear from you, and I hope that you find this to be as interesting as I do. Have a great day.